it's a great pleasure to be here and to speak to you. Thank you for coming. We will hear more about the Valhalla Network as such a bit later on. And I thought in my talk, I'd like to talk about what may also be the main reason why you've come here. You're interested in alternative ways of organizing our monetary system, because you've seen there are some problems with the existing system. Does anyone here think there's problems with our current monetary system? Okay, yeah, okay, we've got a few people here. So the question is what to do and what the alternatives could be and what is a practical way forward. And these are unfortunately different issues, because even if you design a brilliant system, if you can't introduce it, if it's not going to be real, then it's not going to be helpful. Now what they've been telling us is, well, yes, the banks were bad, 2008, and we've heard all the media telling us in the UK, in other countries, how these banks are bad. And of course, a lot of people agree with this, and it looked pretty bad what happened. And during that time then, at the same time, there were a lot of organizations that were created, that sprang up, mushroomed even, some of them quite effective. They immediately had very good logos, great websites, some activists leading them that seemed to be in a full-time job to do this. And quite a few were saying things like, do you know, banks create money. When a bank gives out a loan, it creates money out of nothing. It's a trick. They've conned us. So let's get rid of banks. I don't know, you may have encountered some of these organizations. And so there was this movement for monetary reform that sprang up. And you can see how a lot of people would actually, jump onto that bandwagon and think that, yes, that should be the solution. Monetary reform is what we need. Yes, monetary reform, but what reform? Should we really get rid of the banking system? And so it's interesting how, particularly in the UK, you had consistently all the mainstream media reporting very negatively on the bank. And it's quite easy because it's a very concentrated banking system with a small number of very bad banks. Just today I found out that in an account I have with a company, consulting company of mine that has an account with one of the big 5 or big 4 banks, UK banks. And I was trying to do a transaction, pay a bill. It didn't work. And then there was this, you forget about calling them up and asking what the problem is. But there was this button, speak to our whatever helpline. And then first there was some bot, but I kept insisting, because there was this error message when I tried to do this online transaction, restricted, account restricted. Account restricted. So I kept saying that until I got through to some person apparently on the other side sending me messages on this online chat. And they said, okay, we'll look into it. Please wait. So I waited, and they came back, yes, your account is restricted. Why? Oh, we don't know why. We have to speak to our colleagues in the business information or business evaluation department.
The colleague.
And so I already thought, okay, they're probably doing another business review where they review your business. Now my company has had an account with this very big bank for, 25 years. And they've already had recently 3 reviews. And I sent them all these documents they need and certifications and statements and so on. And so they couldn't tell me why it's restricted, but it's restricted. I can't use the account. I can't get access to, well, we think this is our money, right, what we have at the bank. But of course the bank owns it, and well, for the bank it's a liability. We have a claim on the bank. So bank deposits are owned by the bank. We're merely claimants. We can make the claim. I was trying to tell these people, I can help your bank reduce its liabilities. I can help you discharge your liability by allowing me to make this transfer. This is my claim on you, these funds. Well, anyway, it's frozen. But you've heard this before. If you've been following what happened in Canada with the truckers demonstrations, it was quite a promising movement. Perhaps a little bit like the Occupy movement we saw after 2008, which the big globalists were quite concerned about, and they were working hard to shut down. Also in Ottawa, they really wanted to shut them down. And how did they do it? Suddenly, people were identified from their faces with facial recognition, and their access to financial means were restricted. Their bank accounts didn't work, restricted. Their PayPal didn't work. People donating via PayPal, well, money was not accessible. Even Bitcoin. Somehow they froze. There's the number out. The police gave a report afterwards. And there was like several hundred Bitcoin nodes that they froze. So I don't know how they did this, but they seem to be able to even limit people's access to Bitcoin. Perhaps held at certain exchanges, I don't know. But of course that sort of thing is a big warning signal. So what's the solution? What's the way forward? Should we give up on banks? Should we abolish banks? Well, what's the alternative? The alternative would then be a more centralized system. That is what's currently happening. Under the European Central Bank, and it's not an old central bank, it's one of the newest major central banks, the youngest major central bank. So we've only got, 22 years or so of ECB. More than 5,000 banks have disappeared. And it is official ECB policy to reduce the number of banks. The previous head of the ECB, Draghi, whose surname Draghi means dragons, if you translate the name. So the dragons were saying that there's too many banks in the Eurozone. And that's official ECB policy. Now, if you look at the number of banks in all the European countries, there's one country that totally sticks out. The number of banks is head and shoulders above everyone else. And that is Germany. It's by far the largest number of banks. Also quite impressive, especially since the countries are much smaller, are Switzerland and Austria. And when Draghi said there's too many banks in Europe, I don't think he meant we should get rid of Goldman Sachs, where he earned a lot of his money. So once they've achieved their goal to reduce the number of banks, there will be a small number of very big banks, and then it'll be easy to merge them into one, or get rid of them entirely until there's only one bank left, the central bank. But that is the Soviet system. In the Soviet Union, there was a period where they literally had a pure centralized system with only one bank, Gosbank. And the Soviet Union was a very large country, but only one bank. And I think we all agree it wasn't a very successful economy. That's precisely what Deng Xiaoping concluded when he came to power. And I think we all agree, it's quite clear, the Chinese economy has, until this March 2020 PSYOP at least, been performing really, really well for the last 40 years. One measure is the number of people lifted out of poverty. In China, in those 40 years, more people were lifted out of poverty than anywhere else in history on the planet. It was the most successful economic performance of any country. And we are talking about the country with the largest population on the planet. How did they do it? Well, they worked hard, we know that. But also, they had a clever design of the system. Before Deng Xiaoping, under Mao, it was essentially a Soviet-style economy with a lot of central planning and the central planners in charge. And this did not work very well. And Deng Xiaoping...
That'll be them to sit down with you.
Wow. Did I say anything controversial? I'll try to be loud until this comes back on. So Deng Xiaoping, when he came to power, he thought that it's not good enough what the Soviet system performed. We need better performance. And he was an interesting character because he was not interested in political ideology. Keep going, guys, you can't stop us. So,
speak even louder.
Thank you. Now, he was not following ideology. In fact, he was a radical because he said, let's stop all this ideology. Let's not do this ideology talk, this ideology, that ideology. I'm not interested in that. Let's deliver results for the people. Let's do something that's good for the people. That was his message, which was pretty radical. And of course, it would be radical if you'd said that in Europe today by a leader. Let's do something that's good for the people. And he meant it, and he did it. So he said, okay, there's various economists, there's communist economists, and Marxist economists, there's Western economists. I don't care. I'm going to look at what delivers results. And he looked at the world. And he saw that, well, there are some countries that have been performing really well. And of course, he came to power in 1978. So it was just after the 20 years of double-digit economic growth in Japan. And so he, of course, looked to the neighboring country, Japan. And he said, well, I've got to travel there. I've got to talk to the Japanese. And he did. He traveled there. And I'll tell you one secret about if ever you need to find out something in Japan, he needed to find out what's their secret. How did they do it? And if you need to find out something in Japan, the secret is don't expect to hear the truth and the facts in a formal meeting. Formal meetings in Japan are known to be there for formal talk that is often very far removed from the facts and reality. And the nice thing about Japan is that this is acknowledged and everyone knows it. If you're a naive foreigner, as I was when I arrived in Japan in the late 80s, they would tell me, oh, of course, that was the official meeting. On the way out, listen, let's meet for dinner. I'll tell you the real story. And it looks like that's what what Deng Xiaoping did. And I've seen this not with Deng Xiaoping, but with other Chinese delegations when they came to Japan, when I was there, and we had big dinner events with a lot of sake and motai and in vino veritas is already what the Romans told us, and it's particularly true in Japan. So essentially I can see how this happened. He pressed them hard. He made sure that he didn't drink too much. He kept his mind sober enough to keep asking everyone at this event, because the idea is that after 6 o'clock it's informal, it's off the record, you can speak the truth, nobody will be quoted, it's like Chatham House rules, no, it won't be attributed, but let's just talk reality. And he found out. And what he learned was that, well, if you want economic growth, what is growth? I mean, it's an invention by the statisticians, right? Because any physicist will tell you there is no economic growth, it doesn't exist. It's a statistical illusion. Look at physics, thermodynamics, energy. What is growth? There is no growth. All right. But we do have this statistical concept of economic growth that statisticians have put together. And to have more growth, or have growth at all, means there's more transactions this year than last year. And that means that more money has changed hands this year than last year. And that means in our system that we have, that more money was injected for transactions by those who inject money for transactions. Now, who are those? It's not the government, it's not the central bank, it is the banks. And the Japanese told him, if you want growth, you need more banks. It's no good having one bank. And they told him about the banks, the local banks, the savings banks, the credit unions with a proper banking license, unlike in the UK, and provincial banks, regional banks. And they have to lend for productive business investment. Because when a bank lends, it creates money. And that is, of course, the redeeming feature of the banking system. And that's why we should not do what all these campaign agents have been saying after the 2008 crisis. Yes, the big banks were bad. Oh, yes. But actually, we can't blame them. They did what they were told by the regulators. How can we blame them? They are authorized entities that have to do what they're told by regulators. Well, there were some scandals where they didn't do what the regulators said, but overall, they did follow what the monetary policy said and what bank regulation said. Because bank regulation has never said banks should lend mainly for productive business investment, to increase productivity, to implement new technologies. No, they don't say that. And in the UK, around 85% of bank lending is for things other than productive business investment, for asset purchases, which creates asset bubbles and banking crises. Because there's one more scenario. If bank credit is used for consumption, you get inflation. That's what we have this year, as was completely predictable. And they did the same trick they did in the 1970s. The central banks forced banks to increase money, credit creation in the hands of those who would spend it. And they also, governments in addition, gave incentives to spend, while at the same time they restricted the supply. What do you expect is going to happen? It was very obvious. But the shocking thing is that the intervention by the central banks was so dramatic, how they forced the banks to increase credit for consumption. So extraordinarily strong. Already March, April, May 2020. And of course, I mean, I've been out there. Those of you who follow me on Twitter know, been warning of significant inflation 12 to 18 months later, which is what we have now. But of course, they're blaming it on some war, on sanctions and oil embargoes and things like that. Just like in the 70s when they told us, oh, It was the war in the Middle East, the sanctions, oil shock, supply shock, embargo, and oil prices. No, that happened from October 73. Already from late 71, the central banks got banks to increase credit creation for consumption dramatically, massively. It peaked in 72 and early 73 in Germany, in the US, in Japan, in all the major economies simultaneously. That's what they did. It's coordinated. Because the same happened in 2020 March. That's why we have the current inflation. But Deng Xiaoping found out the good thing about banking. So if bank credit is used for consumption, you get inflation. If bank credit is used for asset purchases, financial transactions, property, real estate, for existing assets, new money is created to purchase existing ownership rights. Well, that's going to boost the nominal value of these ownership rights. An asset bubble happens, unsustainable. If it's big enough, long enough, which mostly it is, then it brings down the banking system, another banking crisis. But the redeeming feature of banking is when banks lend to firms, especially small firms, to fund business investment for productive purposes. New ideas can be industry, can be services. In the UK they say, why is productivity so low? It's a puzzle. And they've been saying this for decades, in fact for the past century. Well, there's one more thing they've said for the past century without doing anything about it, and that's the reason for this low productivity. And why is productivity so much higher in Germany when the number of patents and new inventions is very high in the UK? It's not for lack of creativity, it's not for lack of new ideas, for new inventions and new patents. No, all that is there in the UK. But it doesn't translate into productivity and job creation and growth. Why not? And why does it in Germany? And the difference is exactly what Deng Xiaoping found out when he was in Japan. Making sure that he wasn't drinking too much motai and sake. Namely, you need many small banks. Because only small banks lend to small companies. Now you might think, well, but we've got big problems. Why focus on small companies when we've got big problems? Well, don't forget, the main employer in every country in the world, the percentage varies from 66% in the UK, where it's slightly lower, to 80% in Japan, of total employment is accounted for by small and medium-sized enterprises. So these small firms are the main employer. That's why they matter. And because they're small, if they thrive, it's a much more resilient economy. It's much more spread out, decentralized, localized. Who lends to these small firms? Only small banks. And again, you can't blame the big banks. Big banks have to do big deals because they're also forced by the regulators to be efficient and profitable. And if you're very big, if you've got a balance sheet of 2,000 billion pounds, you want to grow by 5%, are you really going to give out 10,000 pound loans? How many million of those do you need? Well, it's the small banks that are keen to lend to small firms, and that's what you need. And in addition, a system with many, many small banks gives you the decentralization that makes the system much more stable. And on top of that, and that's an important feature, it holds the bankers truly to account because banks are powerful, because they make the decision how much money to newly create and who to give it to this one and not that one. That is the discretionary decision, and it's new money creation. So this decision affects us all, and therefore it should take certain things into consideration that we care about in a local community. And you can do this easily when you have local banks that are stakeholder banks, locally accountable. It has been done. That's what's happening in Germany for 200 years. 80% of the banks in Germany are small, local community banks, savings banks, and cooperative banks. And these are the ones that the City of London bankers and the central planners like Draghi really dislike, because they want centralization. The central planners have been looking at the Soviet Union, and you know what? The central planners that we have in Europe and in America, they've been so jealous. That's exactly what they want. Centralization, Sovietization, copy the Soviet system. We've already got it. The EU is modeled on the Soviet Union. The Soviet Union, did you know, had a parliament with parliamentarians. But it was just a show. They had to rubber stamp everything. They could delay some bills, but they had to pass all the laws that were only proposed by the Politburo, which was not elected. And these parliamentarians in the Soviet Union, they didn't have the power to propose a law. Now, what is the system in the EU? Exactly the same. The European Parliament has no power to table any laws. It's a joke. That's not a parliament. That's not democracy. All the laws are made up by the unelected central planners in the Politburo called the European Commission. But that's just one aspect in which the Sovietization is being copied already. And of course, since 2020, we've seen many aspects: restricting people's movements, restricting individual rights, restricting your activities, restricting your use of energy, restricting the use of transport. All this is going to happen soon as well if we don't stop it. But what Deng Xiaoping learned was, let's forget about this Soviet stuff. It doesn't deliver. It doesn't deliver the goods for the people. What delivers is what he saw in Japan, and when he studied other countries, what he saw in Germany. A banking system consisting of thousands of banks. And so he set out and he created thousands of banks. So China moved from almost zero, only one bank, to now almost 5,000 banks. At one stage, they even had more than 20,000 because there were some very small credit unions that were created. They were then later reorganized. So at the moment, we've got almost 5,000 banks in China. Very similar number to the US. But of course, in the US, they've been, like in the EU, reducing the number of banks in the last 30 years. In the last 30 years, over 5,000 banks have disappeared in America because that's where the central planners now are. The central planners now in Europe and America. And they're copying the methods of the Soviet Union. So the way forward is to learn from this and establish local banks, community banks. And it's very important that the general public now shows support for this. As you know, I've been working for a decade already to establish community banks in the UK. There has been resistance, let's put it mildly, including from those that benefit from a centralized system concentrated around the City of London Corporation, a sovereign state that the Queen in the past and now the King is not allowed to enter without permission because it's outside the domain of the sovereign. And it looks like they don't want community banks. Now, one thing we can tell them is, if you're not careful, they're going to abolish you as well, the big banks, and there'll only be a central bank left. Why don't you back us? Community banks are doing stuff the big banks don't want to do. Lend to small firms. The big banks don't do that. And so, maybe it's time to get some backing, including from the big banks. And when they see the general public wants local banks, that's when they'll back it. Because of course they don't want to go against the general public, against their clients and customers. And of course, there is also the movement to establish alternative currency systems. And there's great hopes there that is possible because legislation in this arena so far has not been so strict as in the banking arena. That's one advantage. And another advantage is that if the official system gets more centralized and more controlled and they restrict our accounts like I've experienced and others have experienced, there could be an alternative. But why don't we combine this? And this is what we're doing in the Valhalla Network. We're trying to combine the approach to cryptocurrencies by having one of the new alternative cryptocurrencies with state-of-the-art technology, distributed ledger, but link it to the establishment of community banks. And remember, successful alternative money systems, when you look into the history, you'll find if they were successful, there was a community bank backing them. Just look at Austria, Wörgl in 1933. Great Depression. 25% unemployment in Germany, in Austria, and also in this town in Tyrol of Wörgl. And the mayor was quite an enlightened chap. Unter Gubbenmoser was his name. And he'd read quite a few books. And he thought, it's crazy, isn't it? I mean, we've got all these unemployed people in my town, but I've got stuff to do. There's this bridge that needs repairing. I've seen the bridge. There's a public building we need to construct. There's a lot of public works. I need to hire people, and they're unemployed. But actually, there's jobs to do for them. Well, forget that. They tell me I don't have money, I can't borrow money. Forget all that. I'm just going to hire them. And that's what he did. He hired them. And he told them, look, there's a problem. I can't give you what they call money. But don't worry. This city is going to look after you. We're a community. We're going to work together. So we'll figure this out, okay? Just trust me. And they were happy. Look, okay, don't worry. It's kind of boring being unemployed. So, hey, let's do it. And so they built bridges, they built buildings, they repaired various public works locations. And what the mayor did was, at the end of each day, he gave the workers a receipt that confirmed that they worked for 8 hours for the community, doing something for everyone. And he signed it. And it was on a form, so he had to produce quite a lot of these receipts. Now, his wife happened to run a grocery shop. Because, of course, for these people now, in the Great Depression, social security system's pretty weak, and they've been unemployed. Essentially, what they care about is, can we buy food somewhere, please? And he persuaded his wife, look, you've got to accept those receipts. Yeah, but I can't, this is not money, I need money. Well, no, look, they've done this job 8 hours a day for the community. Are you going to turn them down? Well, but what do you do with this? Well, you pass it on to your suppliers, to the farmers, and you explain it to them. Don't worry. And that's what she did. And she passed it on to the farmers. And they were initially, of course, a bit reluctant. Well, hang on, okay, so they work for us. Became quiet. Okay, well, all right, we'll accept it. That seems fair. And so this became a currency. There's two reasons why it became actually a currency. One was that the mayor had the right to charge local taxes, and he said you can pay your local taxes in these receipts. And of course the farmers were relieved. Well, that's great. Now I know I can actually discharge my tax liabilities, local taxes, by using those receipts. Secondly, because still quite a lot of people, maybe not directly involved or not having met these workers or the mayor, were reluctant, but there were articles in the local newspaper, and it was explained in various public events, that the two local cooperative banks, the two local community banks, were backing this. And they had given a line of credit to the mayor to back the scheme. And with these two measures, it worked, and it worked like magic. Within 1 year, there was full employment in Wörgl, and all the surrounding villages started to adopt the same system. And then other towns wanted to adopt it. And then, in fact, neighboring countries, they started to adopt it. And the word spread until even Irving Fisher, Professor Irving Fisher, the famous American economist, sent his research assistant over to Wörgl to get the data and study this, because he thought that's an extraordinary event that happened. So the word also got round to the Austrian central bank. Now, the Austrian central bank was not happy. It had worked really hard together with the German central bank in the previous decade to engineer one of the biggest monetary implosions and Great Depression in history. And it does take some work to do this. And here was this lowly mayor of that city in Tyrol who was just ending the Great Depression. That, the central bank argued, is criminal. And they managed to persuade the public prosecutor to threaten the mayor with harshest prosecution and imprisonment for all sorts of charges: fraud, forgery, breaching all sorts of monetary regulations, and that. And they really intimidated him. And it was not easy to intimidate that mayor, but they succeeded. And he had to stop the scheme. And so Wörgl fell back into the Great Depression. Unemployment rose again, back to 25%. And the central bank was happy. So the lesson is, I think it is a good combination to have a new currency, but combine it with community banks. Then we have a strong foundation, and the community banks also help to decentralize, including their governance, decentralized decision making. And of course, the setup we're looking at is also one of a decentralized decision making setup. Thank you very much. I'm out of time. I hope you enjoyed listening to me. And thank you for coming. And thank you for your support.
So I've got a quick question about the areas you're trying to cover. From what I understand, because you're based here in the UK, you're covering the UK and Europe. Is that the main area? Or?
So we want to be global. Now, we want to obviously not run before we can walk. So we want to first establish this in an area that we're more comfortable with, Europe. We're more comfortable with the regulators in Europe and the regulations that exist. We have better relationships there. So we will first start in Europe, but as the Valhalla Network grows and more decentralization occurs, as more control is given to the governance token holders, we want this to expand overseas, internationally. We want to especially target Africa, where community banking is so vitally needed.
So that's actually where I was going to lead towards, because this community banking is a great idea. I love it, because there's lots of communities around the world, especially third world countries, where they definitely desperate leaders. The challenge, I feel, is that in the third countries that there's a technology challenge. So I was wondering whether you're going to focus on a place like this, in Europe, where we're very technology savvy, where the barrier of entry for something like yourself will be a lot more easier. But if you go to the third world countries, there's half the continent doesn't even have a smartphone.
So it's important to remember that Valhalla Network itself is not a bank. It's a DAO. It's a foundation whose mission it is to establish banks all over the world. So the tech side is actually, that can be all over the world. That can be people just signing into their wallet. It doesn't need to be in Africa. They don't need to have that tech ability. All they need to be able to do is issue a banking license and have a community bank, which isn't very tech. Like, community banks are not supposed to be all tech advanced or anything. They're trying to give small businesses what they actually need, which is usually face-to-face meetings. It's normally the traditional banking that small businesses actually want and desire and they need. So I don't see that as a risk at all. Because Valhalla Network can exist anywhere in the world, but the banks that we set up can be in completely different jurisdictions. We can set up a bank, a community bank in Africa, that has very little tech associated with it, but is owned by Valhalla Network DAO.
Great. In that case, I'm sold.
And why is microfinancing? So in Africa, while we're on Africa, microfinancing is a big thing as well, and people think it's a fantastic thing. Now, it isn't a bad thing. It is good to be lending small amounts and investing in small businesses in Africa, but it is not credit creation. Private investors lending money or investing their money into businesses is not credit creation. Credit creation is required for growth. But what is even more required is credit creation for GDP-related purposes. And then if you have productive GDP-related purposes, you get GDP growth without inflation. And that's what Africa really needs. It needs banks that create money for productive purposes.
A quick question about community banks in Germany, for example. I gather that one of the reasons why a large number have been disappearing is actually due to their high profitability. They're actually very attractive targets for takeover by larger banks that simply buy them up and plan to just run them and just leave them making profits in the background.
Or Binance.
Or Binance. So I was wondering, is there a risk with the community banks that Valhalla Network is setting up? If those are profitable, then perhaps the larger banks could simply just come and take those over, making them a very attractive target for acquisition.
Great question, David. Yeah, great question, thank you. So the first point to do with acquiring banks and the concentration of the banking system, as I alluded to earlier, big banks like profitable banks to then buy out and add to their empire, if you like. Now, there's a few reasons why the concentration is happening in Germany, one of them being that regulations are not in favour of small banks. They're not. It's very expensive to be regulated by the central banks. However, we've already taken that into account, and we've looked at it and can see that we can be profitable while helping small businesses. But it's because they're normally cooperative and they're coming together in some way to share the back office fees, which we plan to do with Valhalla Network. Every bank we set up, we plan to have some way that the back office fees and the admin costs can be shared. So then the next question, your actual question was to do with the takeover and the risk of takeover. Now, if you have a bank that's owned by a DAO, where the control of a DAO is decentralized completely, so every token holder has a vote, how difficult will that be to take over? You would have to take over 50% of the supply of the tokens. But not only 50%, if you then have a tokenomic structure where the voting system is done, so that every single token you acquire, the more tokens you have, the less additional voting power you gain for every new token you have. So if you own 10% of the supply, you might only have 6% of the vote. And in 20% of the supply, you might have 8% of the vote. It gets more expensive to buy voting power. Then how many tokens would you have to take over? 99%? And how many people of this decentralized network is going to want to sell their tokens to a manipulative and dangerous player and potentially someone who wants to destroy the network? I would say not 99%, especially considering that I will have my voting power and I'm not going to sell my tokens to them. So it's definitely not going to be 99%. Does that answer your question?
Yes, certainly. It's good to hear of the resilience of our network as compared to the traditional community banking model.
In the EEA banks of yours, what role do you see for securitization to amplify the amount of business that could be done?
So in terms of securitizing what?
The loans and the investments, the loans and the certain categories of investments and the productives.
Yeah, so normally the productive investments that we make, the productive loans that banks will be giving out will be staying on the bank's portfolio and balance sheet. I don't see any need to securitize anything or clump anything together, especially seeing as we're not going to be doing anything complicated or complex like the big banks. We're doing something very simple. A small business comes to us and say, look, we're a baker that lives a mile away from the bank. We need a 30,000 euro loan in order to buy a new oven and buy some big ovens so that we can produce more bread and we can then sell more and we can then refinance the loan. So I don't really see the need for it, but that's not to say that bankers themselves who are running the banks, each bank will be run by its own bankers in the area, they might see some other need.
Yes, there may be the potential for
yes,
expanding business and
of course.
Amplifying.
As long as it's focused on small businesses in that local area, yes, because each bank will have its mandate and will not be allowed to start doing stuff that isn't what it was built for, yes. What the origin was built for.
Okay.
Thank you.
Okay, so 2 questions. One is, how do people invest in this?
Yep.
And is it still open for that? And then 2, with this DAO system, you said it was going to be set up and running at the end of next year, is that correct?
So the actual tech solution, where people will be able to actually submit proposals and vote on it, and it all be connected perfectly.
And then you're also doing a
That'll be into next year.
cryptocurrency on top of
Well, that is the crypto. So a DAO is run by governance tokens, and the governance tokens, they are cryptocurrency. So Valhalla Network tokens will be our cryptocurrency that investors are currently buying through SAFs, Simple Agreement for Future tokens. So
people would be able to trade those?
Eventually, yes, when we go public. So we're in the private sale at the moment, which means private individuals that want to invest anything over 30,000 euros, so 30,000 is our minimum ticket size. Anyone who wants to invest anything over 30,000 euros can approach us and ask to invest. They will be given a simple agreement for future tokens, which they can sign, and it basically says you'll get this many tokens in the future, and these are the conditions. They can agree to that, and then when we go public, which we expect to be end of next year, maybe start of the year after, that's when the tokens will be freely exchangeable. However, investors are locked, like the team. The team are locked for longer, but investors are locked for a certain amount of time. I think it's 1 year after we go public, so that we don't get this massive dump on the market. Because in most crypto protocols which launch, you get loads of bad investors coming in who don't really care about a project but just want to make a quick buck and they want to sell on the public. So when you go public, they dump the market and the price goes very low. We've stopped that. We've locked investors in and said, no, you've got to hang around when we go public for at least a year, and then your tokens unlock gradually. The team, at least 2 years, and then they unlock over another 2 years, so the team's even longer. Investors get all their tokens before the team get anything. But yes, if people want to invest, please get in contact, either through the website or through me or one of the team directly. The Series A is still open. We're a few million. We're about 70 to 75% raised so far.